Hello traders and welcome to Hit the Mark Trading's daily US dollar index review. My name is Martin Rimes. Today's date is Tuesday, November 19th, 2013. Hey, I'd like to remind you, if you could, check out hitthemarktrading.com. And while you're there, sign up for Rooster Call. What is Rooster Call? Rooster Call is my morning email note to clients. And basically what I do is I look at the wires from the overnight action, find out what the news is, what moved the market, and I look at the charts and I write about it. It's a very brief message. Now I assume that traders have gone through their own due diligence and that they've looked at their charts as part of homework. And what I'm doing is reminding clients, hey, we talked about this in the video, it's happening. That kind of thing. So if you're interested in this, I send it to clients every morning, and I'd like to send it to you for free. You need to go to hitthemarktrading.com, go to the contacts page, and sign up. Now, remember that everything I mention in this recording is for your educational purpose only. So I'm going to talk about US dollar index. This is not a solicitation to buy or sell any currency futures or options on currency futures. Okay, very good. Let's go to the charts. All right, well, we have a lot of economic reports tomorrow, and we've got the Fed minutes release on Wednesday, so we are seeing typical quiet trading. Yesterday we discussed the idea we could move higher off this moving average. We're just testing it now. Or drop down here and retest this line. That's what price tends to do a lot of times. So we're going to be pins and needles a little bit until a decision is made. Let me refresh your mind on the weekly chart. I know we just looked at this yesterday. And you can see this is a classic sell signal confirming trend is going to continue and move down. Okay? We know that a central bank action, central bank outlook, central bank report can have direct bearing. Okay? So we look at this, but yet we also look at the weekly chart. The daily chart for tactical entry, and what we see is that yes, we're lower, but gosh, we cannot even exceed the low of yesterday. And I mentioned yesterday that's a signal to go short, as if we go below the low of yesterday. We can't seem to do it. Cannot seem to do it. Okay, so chances are we're going to have a knee-jerk reaction based on some type of an economic report. All right. Again, the minutes are important. FOMC minutes are important because traders are going to do their best to decipher what's in store for quantitative easing. Are they going to taper or not taper? Now they'll be trying to read the tea leaves on this and kick up or down the US dollar accordingly. Okay? Now, nothing else matters, quite honestly. Let's take a look at the intraday chart. A whole bunch of nothing. That's it. We have a very nice defined channel here. So what we should expect is trying to go down to the bottom and test, or shooting up to the top. Okay? Now we talked about this yesterday, I believe. And what you saw in the overnight at about 3 o'clock US time is just one more test, and then it popped right back up. This is just, sideways with downward pressure. That's all we can say. Okay? All right. The market's waiting for an event. That's all we can say. Let me move this line over here. It's just kind of an intermediate type of a trend line. Okay. So if we break up or down, we're going to look for a move up to this window area. Okay. If we fall down, we're looking for a test of the bottom line. That's it. Nothing special. All right, I'll talk to you in your video tomorrow. Bye-bye now.